hit the like button. Now we're live. Rach, like you said a little while ago, who likes to practice? I just swing for the bleachers. That's what we call it.
Yeah.
Yes, that's what we call it. And welcome to the Rachel Miller Show. And hi, Rachel. Like normally we talk like 15 or 20 times during the week, and we've been so busy we haven't really talked at all this week. I think we talked yesterday for like 4 nanoseconds. So we're gonna go for the swing for the bleachers.
We're just gonna do it.
We are, and we have been promising for like 3 weeks. But
yes,
our guest, who I haven't brought on yet, he's sitting in the green room, probably drinking out of a very small coffee cup that
he might be drinking a fancy coffee.
I want coffee. You didn't bring enough for us, did he? No, of course not. So, Rich, you want to introduce our guest before I hit this button to bring him on stage?
Sure, we've got John Wotawa with us. Let's bring him on in. We've been anticipating John Wotawa for the last 3 weeks. There he is.
Howdy, folks.
Hey, John.
Thanks for joining us today. John, this is our 4th episode, and you are our first guest. So in a year from now, when everybody in the world knows us, we get to look back and think, hey, you are our first guest.
Excellent. Well, I know there's millions and millions of viewers out there right now, but when we get to billions, yes, it'd be super nice to know that I'm the first.
Right.
And just remember us when you're just like so famous you can't go out.
Indeed, yes. Two of my favorite realtors right here.
With your very small coffee mug.
Yeah.
Yes, this is my little espresso mug. I take it with me. Well, I mean, wherever I go in my office here. So I'm hooked on Italian coffee now. Since you just
came back from Italy, is that right?
Yep. Me and my wife went to Rome and several other places, and the coffee was incredible, and the machines. And when you get just a fresh coffee every single time, it's addictive. And I came back and bought a coffee machine for myself. So that's it. It's all over now.
That's awesome.
Sorry about that.
You guys, because I'm up all night working on loans.
Well,
so John, speaking of that, you are the broker and owner of California Superior Mortgage, and we would like to start off by asking how many years have you been in the mortgage industry?
Sure. Well, I started out in, I was actually going to college in 1986, and I started working at a little mortgage company part-time as a receptionist, if you can believe that. And then I learned lending from this was a mortgage banking company in Encino called Beverly Hills Securities. I learned really everything in lending from the bottom up on both sides, in servicing, etc. I was a loan processor.
Turn that on silent, Miller. Sorry, John.
Yeah, Miller. Sheesh, trying to get me.
Sorry, John.
Here.
Keep going.
So I started out as a receptionist, moved up to a junior loan processor, processing loans, and then I saw all these loan officers coming in and out, and I decided I want to be a loan officer. And this was 1986, 87, and I knew that even back then it was required to get your real estate license in order to do loans, to originate loans. Even way back when there were rules and guidelines. And so I decided to get my real estate license. And while I was doing that, the president of the company came up to me and said, hey, we would really like you to be a loan officer. So it was kind of like, that's how I got started in the industry. And from there, I went to corporate banking. That was my next step. So I worked in corporate banking, Wells Fargo Bank. I was branch manager. I was division manager for old CalFed Bank. I don't know if you remember them. But to make a long story short, I worked about 15 years in corporate banking, had a really nice position as division manager of CalFed Bank in Westlake in 2002. And that's when Citibank came in and purchased CalFed Bank. And they said, hey, well, we don't do what you're doing at CalFed Bank right now, so you have to find a different position or whatever. So I said, whatever. And I got my broker's license and I started California Superior Mortgage in 2002. And that's what I've been doing since then. So I'm a mortgage broker. I find the best possible financing for anyone either purchasing or refinancing an existing mortgage anywhere in California.
And you just recently were nominated and won an award.
There was
Nominated?
that was the Ventura County Star, and once a year they have Business of the Year awards, etc. And I was under a Mortgage Broker of the Year, and it's by vote. People vote for you, and the most votes wins, obviously. So I was actually ended up in the top 3 in Ventura County, and I got second place as far as vote tallies, etc.
Great.
Yeah, that was quite an honor.
Good for you. Congratulations.
Company, but that was a nice big award especially for all of Ventura County.
Amazing.
Yeah,
that's awesome. And you said you hit this a second ago, and yes, you reside in Ventura County. However, you're able to do loans and loan-ish stuff all over the state of California.
Right.
I'm
only California. I'm licensed mortgage to originate real estate loans in California only. Yeah. But the cool thing about that is whether it's somebody next door or somebody, I'm in Southern California in Ventura County and Moorpark, but I can do loans seamlessly, just as if they were all the way up in Wairika or something, all the way up north, because everything's done online, and it's the process is very simple these days.
And we have a bunch of questions, but that kind of goes back to what we talk about sometimes. Is like I work for Epic, which is a cloud brokerage, and which means I can do it from wherever my phone happens to be that I turned on silent that was bothering everybody. I can do it remote. Rachel works at a traditional brick and mortar brokerage, and you work, if you will, you're it's hard to say, a cloud mortgage guy. Would that be a fair assessment?
Right. Yeah,
Okay.
I mean, I probably see maybe 1% of my clients. I meet them in person. It's just not necessary. Although I love it. In the old days, like I said, I've had my real estate license since 1989. But in the old days, getting a loan was a lot harder. There was literally 3 stacks of the same paperwork that we had to get and to submit that to the lender or the investor. The borrowers had to sign a date, every single page. There was hundreds and hundreds and hundreds of pages, and if you got it wrong, you had to go back out and do. So that's all done. It's super easy, and we can close loans super fast these days.
We love that. Now, John, there's a bunch of misconceptions out there when it comes to pre-approval and approvals. Can you kind of give us the high level view of the difference between a loan pre-approval and a regular approval?
I think you're I think you're talking about like a pre-qualification and an actual lender specific.
Confusion.
Yeah, no, I get that all the time, especially from brokers, because quite frankly, there's a lot of lenders out there that aren't underwriters, and it's just kind of, especially when it comes to self-employed borrowers, there's a lot of different guidelines and ways to that a true underwriter calculates monthly income, for instance. And there's a lot of brokers out there and loan officers that will just write up on their letterhead an approval, and you really have to be able to look at that and see if it's legitimate. A legitimate approval comes from an actual lender who's lending directly. I can write a pre-qualification, and the people I work with that know me know that's acceptable because I've been underwriting my own loans for 20 years, and I know what I'm doing. but there's a lot of people out there that don't. So you got to be able to look at that letter and know that it's legitimate. I have realtors and even other lenders calling me all the time with pre-approval letters and asking me, hey, what do you think about this or that? And if you're in the industry and have knowledge, you should be able to just look at that and know if it's legitimate or not. But having said that, for you as realtors, definitely what you want to see is the AUS, the Automated Underwriting System approval, which is the Fannie Mae, Freddie Mac, the LP, and the DU accept eligible or accept. They're both accept eligible. So that's what you want to see, and that's proof that the lender has actually seen it, approved it, and it's gone through the automated underwriting system, and they've said it's okay as well, because everybody underwrites to the Fannie Mae and Freddie Mac, the AUS underwriting guidelines. So once they get that, yeah.
I'm sorry. I just wanted to ask this before it left my head, but I also don't want to interrupt you completely. What you mentioned, two acronyms, DU and LE?
LP.
LP. What do those two things do?
Loan prospector, and the other one is desktop underwriter. Desktop underwriter is the automated underwriting system for Fannie Mae.
Okay.
And LP is the automated underwriting system for Freddie Mac.
Okay, perfect.
Does that show up? Does that show up on the letter? With that
it shows up on the AUS letter. Yes, because well, for me, I run them both on every borrower because I want to, depending on the borrower and the circumstance, Freddie, even though the pricing is relatively the same, Freddie Mac, for instance, has some slightly different guidelines. So depending on the borrower, let's say if a borrower is, and a good example would be if they have a lot of outstanding student loans. Freddie Mac calculates the monthly payment a lot differently than Fannie Mae. So if you got a borrower who is, their ratios are a little higher, they're on borderline, you want to have a guy like me who knows what he's doing and knows which one of those programs is going to fit for that borrower, because even though they got approved, let's say, or accept eligible for both, the one's probably going to give them much better ratios because it's the less monthly payment per month. So does that make sense?
Yes,
it does. And that actually, that's great.
So for a realtor, I mean, if people are just watching this, borrowers, people who aren't realtors, they probably won't understand anything about Fannie Mae or Freddie Mac or AUS or anything. This is primarily stuff that you guys should know. And as a realtor, if you're because you talk to me about pre-approval letters, etc. If you're a realtor and you have a listing and let's say you're getting an offer on your listing, you always want to ask for that AUS decision. Always. If they don't have it, then it means they still may be approved for a loan, but they're not getting a conventional Fannie Mae or Freddie Mac loan. They're not getting the best. It's not a full doc loan. It could be some kind of bank statement or stated income loan, or something like that, or a hard money loan even, which maybe put you guys a little bit more at risk on the sale of your property. So always ask for the AUS decision every time you get an offer. You make sure you send me the AUS decision with that. That way you can see that it's gone through the system, and if not, then you know what you're up against otherwise. Sorry.
No, that's really great. And even the people that are watching this that are borrowers, and they are going through whatever lender they're going through, they could ask the lender, "Hey, is this an AUS? Is this AUS?"
They could. They could say, "What's the automated underwriting system? What was the outcome of that?"
See, I think that's
how do you know that? Because that's really not generally a thing. But you do want to have a lender approval. I don't always send out the AUS decision up front because the whole thing's about an 8-page thing, and it really says everything about the borrower. And sometimes you guys
Too
don't
much
need
information.
it.
Yeah.
But you can't get a real lender approval without that acceptable AUS decision. So for me, I send the lender approval to you guys with any offers that the borrower may or realtor may have, and that shows, because it's gone through the system and they know it's AUS approved.
I think that's great for the borrowers to have that information, and it will also make their lenders say, "Whoa, they know more than I thought they did."
Yeah, a little bit of education. But let's say that we are talking to homeowners. They haven't been in the market in 20 years, 25 years, and now they find themselves in the market, and it's a very different market now. So what would you say, John, are some of the top things that you would want buyers coming into this market after a very long time? What would you say they should know before applying for a mortgage? What are the things they're going to need to come to you with, pieces of information? What do they need to do to be ready?
Sure. It's hard to even be ready, even when you're super ready in this market. This is the craziest market right now, especially in California. Well, everywhere. Prices are super high. And now with all the stuff going on, inventory was already low. So we didn't even have enough places for people. And now we got all the fires and the disasters. And now people are even, going to be needing homes even more. But and interest rates aren't low.
No.
They're not 4 years ago interest rates. I was closing deals at 1%, at 15-year fix in the 1% and 30 years on 2. My latest 30-year fix for A paper is about 6.5 right now. And everybody else is over 7. I know that. I'm around 6.5. As a broker, I get the best pricing. But there's 3 things that you got to be ready for. You are 3 things that are going to determine whether you get the best pricing and the best deals. So number 1 is credit. 740 FICO score. The lender's going to use your mid FICO score. So there's 3 scores you're going to get: an Experian score, a Equifax score, and a TransUnion score. Those are the major credit bureaus. So when you run your real estate credit report, you're going to get 3 scores. They're going to throw out the highest and the lowest. You're going to use a mid score. So you want your mid score to be 740 or above. 740 or above is going to get you the best pricing on whatever program that you qualify for. And let me give you an example. If 640 is pretty much the minimum before we have trouble even finding you a loan. So if you're under 640, you probably need to talk. There are some things you can do. I'm not a credit repair guy, but I do know there's some things you can do, and I can let people know that as well. Not right now; it would take too long. But there are things you could do to improve your score, but it takes a long time. So 640. Let me give you examples. I'm 30-year fixed, 6.5% at 0 points with a 740 FICO score with 20% down on a A paper deal right now. If you're at 640 on that same deal and everything else is the same, that rate goes to over 7% with fees. So that's the difference. That's how valuable your credit is. Make sure you have good credit. If you want to look out for anything, probably the biggest factor in getting a great rate and great pricing, regardless of the loan you qualify for, regardless if it's conventional FHA, bank statement, anything, is credit. So make sure your credit's good. So number 2 is your assets, your down payment. Your down payment's going to affect your pricing. If you're putting 3.5% down for an FHA loan, or 3% down, the very minimum, and the lenders, let's say if you're doing a conventional loan 3%, and the lender is putting down financing 97% of your loan, who's more at risk? The lender is. So he's going to charge you more as a borrower for that risk. If you're putting 20% down, then the lender's only putting 80% down, not only, but they're still financing the majority of it. So they have most of the risk, but not as much. They see you putting some money in. So the more you put down, the better your interest rate's going to be and the lower your fees are going to be. It's as simple as that. So that, and then the other thing is income, of course. The lender, people think, oh, the lender, I'm putting 50% down. The lender just wants to foreclose on my home. No, they don't. What the lender wants to do is make sure that they get their payment. That's it. They're in the business to get their payments and make loans to people, and they have to calculate their risk, and so they're going to prove your income. W-2 employees, of course, salaried employees are the easiest to qualify. It is what it is. They make what they make. Self-employed borrowers are a little different. I'm going to give you an example that you guys should know of. A realtor called me the other day, and he said, I got the self-employed borrower, and they make $130,000 a year. So they make $130,000 a year. They say they net $130,000 a year. I said, well, that's great. Let's see their self-employed tax returns. So they didn't really want to give me that. They kind of wanted me to just write them something saying this, they make 130, and based on that, they qualify for this or that, which I did actually, but it was just based on a verbal. I said, this is verbal information. I have seen nothing, disclaimer. So we get the tax returns in, and guess what? After I viewed their, this was a sole proprietor, so not a corporation. So it was simple viewing of their Schedule C on their personal tax returns. I checked it out, and they actually had a loss. They had a $20,000 loss averaged over the last 2 years. So here's a person went from 130,000. So make sure you're dealing with someone who's going to say, let's look at the tax returns and see what they actually make before this guy was out showing them $1 million homes. You don't want to do that if they're not going to qualify for the loan. And that's why you guys, everybody needs a great loan officer, whether it's me or somebody else. But it's super important. So income, credit, and assets. Those are the three big things that are going to qualify you for a home purchase or a refinance.
John,
Very good.
If I'm going to pigeonhole you here for a second, if someone were to call you and say, hey, I want to go look for homes, and I need to get a pre-approval done, how long would it take them to get I'm going to call it a legitimate pre-approval to go out and start looking for homes?
It takes me, it depends on the deal, but the hardest thing for me is getting the people to send me the documentation that I need. My job's super, super easy, and I can do it super fast, but I can't do it unless I get the documentation I need. So, excuse me, the first thing I do, as I typically talk to the client, see what they want to do. Like you said, they want to get pre-approved to go home shopping, no problem. I send them an email with exactly what I need to get them pre-approved. Once they send me, get me all the items, which typically the best way, of course, is by email or so scanning me the items, sending me the files. Once I get those items, typically I can get a pre-approval within an hour.
Wow.
If it's a big file, I mean, I just did one. I just closed a 4-unit purchase that involved 4 different family members, and they're occupying one of the units. So there's rental income from the other 3 units involved. So there's tons of documentation. That took me a little longer, maybe less than a day, so less than 24 hours for even the hardest pre-approval. Once I get the correct documentation.
Great. Right. Everything kind of, you can only do so much. You need somebody else to toe the line too, to do their job.
The thing about my company is I deal with everything. I process my own loans. I'm the broker. I'm kind of a boutique lender. We can handle about 10 to 40 loans a month. But other than that, we have to hire some more processors. But I like to look at all my files. All my clients deal with me from the very start to the very finish. So I can get pre-approvals on a Saturday evening at 10 p.m. I can run credit. I get lender approvals. I can get those AUS decisions. I can do a lot of things that typical lenders can't. They go home at 5 o'clock from B of A on Friday, and you don't hear from them again. But try to get a pre-approval in an hour from literally anyone out there these days, but especially going into a retail bank or something,
Right.
which, by the way, I beat their pricing all over the place. But try to get a pre-approval within a day, or even getting a return call in a day.
Right.
It's super hard. And that's what we pride ourselves on at California Superior Mortgage, is our availability, for sure. Because you guys, I mean, like right now, we work, well, this is work hours for normal people, but we're not normal people. We work all the time. We're available all the time. And if Scott can't get a hold of me on a Sunday evening at 8 p.m. when he's trying to write an offer, then that's not good. He needs to. We work when we work. So
right.
I digress. Sorry.
That's okay. I think we have time for one more question, and this is kind of speaking to realtors. As realtors, we're always looking for ways to help our clients succeed. What recent mortgage trends should agents be aware of to better advise their clients?
Well, I'll give you one that I was working on recently. Just a little thing that is going to help realtors get their offers accepted, a higher percentage. So the big trend right now, speaking of, because you said trend, is appraisal waivers. So I was just dealing with a client. So an appraisal waiver is when you, so when I get a file, I upload the whole file on a purchase transaction. And then, like I said earlier, I send it through the AUS automated underwriting system. And the underwriting system will come back, and either Fannie Mae or Freddie Mac, DU or LP, might say, hey, we accept the value as stated at this value, and we do not need an appraisal at all. So if that happens, that's awesome, because you can make your offer up front and waive the appraisal contingency, because we're not even going to do an appraisal at this price. So it's a super valuable tool, and realtors should be having their lender run that AUS decision up front before they make their offers. Because if you have an offer and you're gonna waive your appraisal contingency up front, and someone's not, they have to go through that process, they're gonna go with you, because you don't want to worry about anything happening with that appraisal, low value, termites, anything like that. So that's a
leverage. Mm-hmm.
Is
that called like a desk appraisal? Is that what that's called? Something like that?
No, a desktop appraisal is just a something where it's more like on equity lines or something like that, okay, where appraiser will just kind of review, instead of going out and inspecting the property, they'll just do a desktop and review the specs of that property and say, yeah, I accept that value. Just a kind of a quick mini appraisal.
Oh, okay, that makes sense. Yep. I'm going to keep you on
appraisal waivers, and the other thing is you got to. So that doesn't take away. So some people are worried, like, well, I should do an appraisal, right? If they accept that value is there. Believe me. And you don't want to do an appraisal if you don't have to. Anything could happen, like a screw up your deal. But just make your borrowers sure that you're going to do the inspections. That's still going to go on, and you're going to have your inspectors check out everything, and you can still, ask for, whatever concessions you want. That has nothing to do with the appraisal. So, make sense?
It does. I'm going to keep you on here because Rachel, I pulled Thousand Oaks up, and okay, I think there it is. Like, that's the this is for January in Thousand Oaks, and
where did you get that?
Where did I get that? Is that what you said?
Is that from List Reports?
Yes, that I think that you sponsor. So kind of weird, huh?
That's awesome.
I had my
tools for other realtors that might be listening. If you're not hooked up with List Reports, where you can get everything's free, it's all automated. You can pull up stuff like this all the time. You could There's social media posts that you could do that are pre-done for your business and marketing. And most importantly, if you have listings, list reports allows you to personalize any open house sheets, listing sheets, all colored. Everything looks incredible. Pulls it up, makes it all automated, and also you should if you don't have list reports, call me and we can get you set up with that. Let's just put it that way, because I do sponsor a lot of realtors like Scott.
Yep.
Rachel, I think you're using it as well. But
I'm going to say yes.
you are, right, and we're going to talk.
And forget how that I asked. Where did you get that?
Well,
this wasn't a pitch, really. It wasn't a sales.
It's my voodoo. I actually blocked my name off of it, so because mine is way different than yours. So I'm going to stay in the same theme. This is the local housing report for Thousand Oaks, and the median price $1.33 million. Holy wow!
I feel like that's kind of high right now.
It's interesting because I just got a call from a realtor. One of their deals fell out. They're making an offer. I was literally up till about almost midnight last night, back and forth with the realtor and a borrower, and they ended up not making they got countered on a property, and they were going way over asking price. It was kind of getting crazy, and they decided to stop. But they called me just today, this morning, and said, "Oh, we're making an offer on another one, and it's in Thousand Oaks, and the asking price is $1,325,000."
That's really funny.
That's right.
Tell us, what do you know anything about the house? 4-bedroom? How many bed baths?
Yeah, I have it. Where is it? It's I have it right here.
While you're looking that up, I think it's interesting that there's 24. Can you say it now? 24 days is the median days on market, down almost 60% from December, which I think is interesting.
December was slower.
Yeah.
And in the last 5 days, you have 12 new listings, and almost wow. Look at that. So there's 100 listings.
One is at it's listed. It's on MLS. It's 2507 Haymarket. I love that name. Haymarket Street, Thousand Oaks, $1,325,000. It's a 4+3, 2,728 square feet with a pool. Let's see what the lot size is.
It's above average home. It's not like a 4-bed, 2-bath.
Yeah, it's a nice place, big place, built in '87 with a 9,500 square foot lot and a pool. It looks super nice. I'm looking at the photos here, but it's interesting. These borrowers are kids, and they kids compared to me, and Scott, of course.
Hey. where's
Rachel's the young one here. So these borrowers are buying this $1,325,000 house. They bought a little tiny house years ago, and they're selling that for like $900,000, and they're going to put $600,000 down on $1,325,000, and their payment's going to be it's going to be around, with taxes, insurance, and everything on this $600,000 loan and this $1,325,000 sales price. It's going to be about $5,800 a month for everything. And I don't mean that to be discouraging. And they're getting a $600,000 loan. It's not really in the grand scheme of things that high.
That's the reality of things.
That is. And these kids are making a ton of money these days. These two are actually artists in the entertainment industry. They're both making a ton of money, and they sold their house. They're making they have a big down payment, and they're able to qualify. So
that's amazing. Good for them.
Simple deal, yeah.
And then we have my hangout here in the Crest, which look at the difference in that, which are actually, when I pulled this up,
5 days on the market. Wow.
Yeah, that's about accurate too. And I find that, our median price is up almost 5%. Well, I guess closer to 4%, but first thing I noticed was that our active listings, they're at 53, 65 days on market. That's up almost 8%. And it's interesting at these smaller numbers, it's really quickly visible. And I was seeing if Curious was on there. It's not on there. And we have the 4 new listings. One of them is mine.
Yeah.
In the last 5 days.
1 out of the 4. Hey, that's quite a high. You're the top producer.
He is actually the top producer.
No, I would like to. I'm no.
He's
yes,
amongst
yes,
the top. He's amongst the top.
You're the tops in my book for Ridgecrest. That's for sure.
I'll go with that. You know what? I'm going to show you
know more about Ridgecrest. I really do.
Oh, Ridgecrest is awesome.
That'll be another show.
Yeah.
Okay, fine.
Yeah. We try and keep it at 30 minutes so that we don't lose all of our viewers.
Yeah, for sure. For sure.
We've had
all zero of them.
We've had like a bunch today. There's list reports, shows you all kinds of fun things and shareables and marketing. And what's cool is, John, you were saying this a second ago, like list packs. Let's see if I can go grab that. This will show you like homes with pools, like you were just talking about your homes with pools.
Right.
That's in Lake Isabella, and I can preview that. I have customers that call, and I don't want to say it that way. We have people calling up from the LA market asking us, "Do you have houses with pools?" Yeah, we're the desert. Of course we do. But that's actually my house, the house that I'm selling in Lake Isabella. Yeah, and I'm pretty sure it even has. Oh, look, who's that guy?
We don't know.
We can't see what you're seeing.
We're not seeing anything. You're having a conversation with yourself.
It sounds interesting, though.
Yeah, you know.
Goodness.
I know.
You guys,
I really want to see it now.
Wish you were here.
oh my goodness! I thought you were seeing that. There, look at that. Who's that guy right there?
Okay.
There.
Guys,
Yeah,
that's me. That's right.
Yeah, and then it shows you the house, and yeah, see, look at all that. Yeah,
this is part of list reports. This is great. Everybody should be doing this.
Everybody should have list reports.
Yes, list reports said if your
And
agent's not
also
using it,
have the #1 loan officer on there with them, because it's actually proven that if you team with a loan officer on those reports, those people are actually produce more. Because I get a lot of people that call me, so they'll come into open house, they'll grab a flyer, they'll call me for financing. Sometimes I'm able to bring them back to you guys, especially if they're not working with the realtor. So
look at that house right there. Look at that house right there.
Oh, that's cool.
Look at that. Look at that. Look at that pool.
That's really beautiful.
Shadow Mountain.
Is that one of your listings, Scott?
No, because I'd be in the pool right now. Well, no, I wouldn't. It's cold.
Okay. It's very, very pretty.
Look, you can see the snow in the background right there.
It's beautiful.
Oh, 2.59 acres. That's nice.
Yeah, and it's $749,000. What would that house be down there? Look at the house. Isn't that just stunning?
On 2 acres.
Down there? Oh my.
$4 million house.
4 million.
Probably. Mm-hmm. Right, Rachel?
Yep, that's what I said.
Yeah.
Look at that. Yeah. Look at that.
That's beautiful.
That main suite.
That's gorgeous.
Hey, send me that.
Congratulations to whomever gets that home next.
That is a beautiful home, and that's a house with a pool. I can send it to you. Just go on my website, John. Okay, now I'll send it over to you.
There you go.
Yes, and see, now I'll even stop sharing that now. So, John, I want to thank you, and Rachel, I'm putting words in her mouth, wants to thank you for coming on today. And we do
we'll have you on again.
Yes, please do. My pleasure. I'll have another cool thing to help you. I'm always looking for ways to help realtors produce more. List reports is one example. Having the best pricing, of course, is another example. So, but we'll save some for the future.
Amazing.
Show.
Thank you, John. And John, I'll see you Friday.
Yes. Oh, awesome. What?
Yeah.
Friday for
an invitation.
Friday
Friday for lunch. Yes.
Okay, because I have that thing going on Saturday also.
Oh, I haven't. Yeah. Okay. We'll talk offline. Yeah. Okay.
Yeah.
Where are we
Well,
going
I
to
mean,
lunch
just
at?
go up if you feel like it. It's-
Well,
where
it's like, wait.
Oh.
Where are we going to lunch at?
Oh, look at
I
the
can
time.
drive.
Time to go. Time to
Wait.
go.
Okay. See you guys later.
All right,
Okay.
John. Thank you so
Thank you
much.
for having
Take care,
me.
Have
guys.
a good one.